Today's the 30th of January 2021. My name is David Hickson, and in today's market update we're going to be taking a look at the S&P 500. We have a few months to catch up on. I'm going to be discussing the fact that it is still moving in a very bullish way. I must apologize for the 3-month silence. I haven't had a chance to record a market update video because I have been very busy on a not so secret project. I've been working on a book about Hurst cycles, in particular my approach to Hurst cycles, and that book is going to be published later this year. I will be giving you a lot more information about the book as we approach publication, but that is the reason that I have not been able to record these market updates recently. I hope to get back to them on a regular basis. Before we take a look at the markets, I must ask you to please make sure that you have read and understood these disclaimers. Because we're catching up on a few months, I'm not going to go into too much detail about every little twist and turn that the markets have been taking. My previous market update was way back over here, and at that time, of course, we were still, or I was still, expecting the 40-week cycle trough to lie a little bit ahead in, I think about early December, if I remember correctly. So, of course, what happened was that the markets started accelerating very quickly out of this trough that I was expecting to be a 40-day cycle trough, with the 40-week cycle trough still lying ahead. I did mention, and it's always important to remember when dealing with cycles, that you need to expect that cycles can run shorter or longer at times, and of course it is probably the case that cycles have been running shorter. So let's just start with a bit of a clean slate and take a look at my preferred analysis at the moment. This is one of the analyses that I've been tracking for many months, since sometime last year. In fact, it was shortly after the trough in March of last year that I presented this analysis for the first time, and I spoke about the possibility that the cycles have been running short. And if we take a look at the right hand side of the chart, you can see that the list of cycles here is shorter than the usual nominal model. So I've applied what's called a custom nominal model to Sentient Trader. A nominal model is simply a list of cycles that Sentient Trader uses to analyze the markets, and the default nominal model that we usually work with, and that I still work with today, is the model or list of cycles defined by Hurst way back in the 1970s. But this nominal model assumes that the cycles are shorter. I spoke about it in a market update last year, and you can see from the list of cycles that indeed the cycles that have been found are shorter. So with this shorter nominal model, you can see that we have a fairly good analysis, and of course the important point is that the 40-week cycle trough formed at the end of October. You can see that I haven't had to influence this analysis in any way. None of these troughs have been pinned, and it's a fairly good analysis. If you take a look at these prominent troughs, they are fairly prominent in price, except for this very difficult placement of the 80-day cycle trough over here, which has stretched this 80-day cycle and as a result compressed this 80-day cycle. Is that the correct analysis? It's impossible to say. There might be a better position for that 80-day cycle over there, but what happened during this period of time is that, of course, we had a pretty much straight line upwards movement that I spoke about in previous market updates. And indeed, we've had another very similar, fairly straight upwards movement that has occurred recently. So why does that happen? Why do we sometimes just get these persistent upwards movements? That is because of the bullish strength in the market. You must understand that if this trough in March of 2020 was a 54-month cycle trough, as I believe it was, if not indeed a 9-year cycle trough, or even possibly an 18-year cycle trough, but it's a very big magnitude cycle trough. And after that happens, you've got a lot of long cycles that are applying a good deal of bullish pressure on the markets. So it's a very bullish market because of those longer cycles pushing slowly upwards. And when you have that kind of bullish pressure, the shorter cycles are overpowered. They will still influence the markets to move down slightly, but only very slightly. And so there effects are overpowered by the longer cycles. And if we zoom in here, we can see what has been happening since that 40-week cycle trough at the end of October. And you can see that even according to this analysis, the 80-day cycle that formed at the near the end of December, it was in fact only a one-day move down. That's according to this analysis. We could position the 80-day cycle trough over here, but there again, it was a very short move down into that cycle. And the reason for that is because those shorter cycles, and normally I wouldn't describe the 80-day cycle as a shorter cycle, but when we're following a trough of 54-month or 9-year magnitude, the 80-day cycle is a pretty short cycle. And so the shorter cycles are overpowered and they're sort of squeezed and their influence is greatly reduced. So what has happened since then? Well, since then we have seen the formation of an 80-day cycle trough, probably over here, possibly over here. And then we had a 20-day cycle trough forming here. Not a very good placement for that cycle trough. More likely it in fact occurred over here. But the important thing is that price is now moving down, and it's moving down into a 40-day cycle trough. So here we've got a bit of a spread out nest of lows. It's not a very neat, elegant nest of lows. It indicates that the cycles are not very clear. That's what that means. But the message is nevertheless still fairly clear, which is that we're heading down into a 40-day cycle trough, because the 40-day cycle trough is the next one that needs to occur. And then we're going to come down into a 20-week cycle trough. Is it possible that the 40-day cycle trough actually occurred over here, and that we are now seeing price coming down into this 20-week cycle trough? Yes, it is possible. Let's take a look at my favorite tool, the FLD, to discuss the possibility of the 40-day cycle trough having occurred here. And I'm going to zoom in so that we can take a look at this in a little more detail. Now, you probably know that following an 80-day cycle trough, price is expected to cross up above the 20-day FLD. What does it mean that price basically only dipped down below the 20-day FLD at the time that the 80-day cycle trough formed? Well, it very simply means that there's a lot of bullishness in the markets. Okay, those longer cycles are pushing upwards. When the longer cycles are pushing upwards, the smaller cycles, including the 80-day cycle, or in fact any cycle, will tend to have a reduced effect on the markets, and therefore might only be able to bring price below a very small magnitude FLD, such as the 20-day FLD. So it dropped down below that 20-day FLD, bounced back up above it, and has been up above it since then. It came down and found support at the 20-day FLD at this position over here. And then at this position over here, in about the middle of January, you can see price came down and it crossed down below the FLD only by virtue of the fact that the FLD was jumping upwards so quickly. So that's not really a very genuine crossing of the FLD. So I tend to regard this kind of situation as a situation where the FLD is effectively providing a form of support. Now, the form of support you would expect to find at around about the position of the 20-day cycle trough. And in terms of our sequence of interactions, following the 80-day cycle trough, we would get a jump above the FLD, which is labeled an A category interaction. Price was hardly below it for more than perhaps even a few hours, but nevertheless we get a cross above the FLD, and then when price comes down and finds support, we would label that a B and then a C category interaction. But now, given the very few number of bars that elapsed, potentially we get what is sometimes identified as a double BC category interaction, and we identify this as the 20-day cycle trough. As price comes down into the 40-day cycle trough, as you can see, expected by this nest of lows over here, we would get a D category interaction, which usually provides us with a good short trading opportunity as price comes down and fairly accurately achieves its target. Now, just a little quick side note, where did this price actually cross that FLD line. Some people might be tempted to say, well, it crossed it there, where that bar clearly crossed it. But you must remember that in order to correctly calculate the price crossing, you need to be using the median price. So let's display the median price, and we can see quite clearly there that the level at which the median price crossed the FLD was over there at about 37.80. Our high price, which we look at on our candlestick chart, was about 38.70, I think. So we've got 90 points to go down. So we're looking at 36.90 for our target for that D category interaction. Price didn't quite get there. It missed it by a few points, but possibly that target has been fulfilled. A D category interaction would lead us to expect price to come down and fairly accurately achieve its target, and then to pull back up again. And then we're going to get an E category interaction, and it's going to continue upwards. But now, what if this 40-day cycle trough did actually occur over here? We've got the circle for the 40-day cycle trough over here, and possibly that 20-day cycle trough should be here. So that means the price is now heading down already to the 20-week cycle trough. Well, this is where the FLD trading strategy is really useful, because the price crossing down below the FLD at this point here, I labeled earlier as a D category interaction, which gives us the opportunity for a short trade, and that was based on the idea that price was coming down into the 40-day cycle trough. What if price is actually already coming down into the 20-week cycle trough? Well, in that case, we would label that slightly differently, and this would have been our B category interaction. This would be our C category interaction, a very weak and not very impressive D category interaction, then our E, and now this is our F category interaction. What is an F category interaction? It is also an opportunity to enter into a short trade. So whether price is moving down into the 40-day cycle trough or the 20-week cycle trough already, we had the opportunity for a short trade. What is the big difference? An F category trading opportunity is likely to be a much more impressive and profitable trading opportunity. Price will fulfill its target. It's the same target of 36.90. It will fulfill its target and probably exceed it. After having fulfilled the target, it is likely to come back to the FLD and find resistance and move further down into the 20-week cycle trough. So an F category trading opportunity is a really good, profitable one. However, a D category trading opportunity, and let me reset that again, a D category trading opportunity will likely achieve its target and then cross up above the FLD again in an E category trading opportunity, and only then cross down below the FLD as it moves down to the 20-week cycle trough. So what do we need to do? We need to set our stops tightly on this short trading opportunity in case it turns out to have been a D category trading opportunity, and certainly watch price very carefully as it comes up towards this 20-day FLD, because the deciding factor will be whether it manages to break up above the FLD or not. Now let's take a look at the slightly bigger picture. I'm going to zoom back out again here, and let's go all the way back there, and let's take a look at the composite model line. The composite model line is of course the result of taking the analysis at the foot of the chart and recombining all the information about the cycles to show us in the past what influence the cycles had on that price movement, and the projection into the future shows us how those cycles will influence the price movement moving ahead. It is not, strictly speaking, an accurate projection line. It gives us a way for visualizing what this analysis is telling us to expect. So let's zoom out just a little bit here and scoot that across. There we go. The point that I wanted to make is that price is now coming down into a 40-day cycle trough, or potentially the 20-week cycle trough already. The composite model line is of course showing the analysis that we have, which is still expecting a 40-day cycle trough to occur first. That's why we get that little wiggle. The important thing is that of course the 20-week cycle trough will occur round about here, perhaps in about the middle of February. and then price is going to move back up to another peak and then come down into the next 40-week cycle trough, which will also, of course, be an 18-month cycle trough. There's the circle for the next 18-month cycle trough. So let's just have a look at these very simple M shapes that are formed in the market, and you can see, there we go. So this M shape over here is the M shape for the first 40-week cycle, according to this analysis. And you can see that it is a very bullish M shape. Okay, the peak is in the second part of the M shape, and price moved up a lot between the first trough and the ending trough of that M shape. The next M shape, the current 40-week cycle that we are in, is then expected to be less bullish, because that is how things work. It's not surprising that the first one was very bullish with a 54-month or even bigger magnitude cycle trough in March of last year, but the current 40-week cycle is expected to be less bullish than the previous one. It's not going to be a bearish 40-week cycle, but it is expected to be less bullish, as can be seen in the composite model line. In particular, the fact that we are not certain that we're going to get a higher peak as the second peak of that M shape. It might be higher. The bullishness of this market might be so strong that in fact we're going to still see a higher peak occurring around about here in March, but it might not be a higher peak, and then of course price is going to come down into the 18-month cycle trough, which is expected around about the middle of the year. Now, just to finish off this video, I would like to show you an alternate analysis which indicates that the 40-week cycle trough that we've been discussing forming at the end of October might not yet have occurred. Here it is. I'm not going to dwell on too many of the details. It's an analysis we were looking at last year, so many of you will recognize it and are perhaps even tracking it yourselves. The interesting thing about this analysis is that the 40-week cycle trough has still not yet occurred. And I know there are some analysts that are saying that price is not coming down into a 20-week cycle trough as suggested earlier, but that it is in fact going to come down hard into this expected 40-week cycle trough. This is not my favorite analysis. It has some very questionable positions of troughs, in particular this 20-week cycle trough over here. That's a very questionable position for a 20-week cycle trough, and then to be followed by a strong bounce out of a 40-day cycle trough, and then a really strong bounce out of an 80-day cycle trough doesn't make sense to me. So this is definitely not my preferred analysis, but it is one that I like to keep an eye on. I would just like to point out this combination of the identification of a shorter term cycle trough, in this case the 80-day cycle trough, and then these floating circles very close to that trough. When that kind of thing happens, it is very often an indication that in fact the trough that has been identified as a shorter cycle trough should really be identified as the greater magnitude trough. That's a combination that you will sometimes see when the analysis is not very clear. However, it's by no means an absolute science. That is not definite confirmation that this is a 40-week cycle trough. So this unlikely but possible analysis still remains for us to keep our eyes on. I do hope that you found this market update useful. Please put your questions in the comments below or send us an email. I look forward to hearing from you.